Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer, Brian Johnson. I'm making professional trading simple. And the Bulls won the day, pulling things up today. But is anything really broken? No, pretty much doing exactly what we have been doing for quite a while. I do not quite have. I don't have quite enough information right now to draw another trend line across some of this stuff, but I'll give it about one more day. We'll see what happens tomorrow. There is some information. I think the Fed Beige book comes out tomorrow afternoon, so if we continue higher, look for some movement maybe tomorrow afternoon after the Fed Beige book is released. But what we're seeing is exactly what we have been now since the last 2 weeks, and that is run straight up, trickle around the top, big move down, trickle around the bottom, big move up, kind of trickle around the top, big move down, trickle around the bottom, big move up. What do we do? Maybe trickle around the top? I don't know. Now there is room above us with the Dow. If we break this 10,500 area, there is a little bit of room above us to get back up to this upper trend line here. And we'll see that more clearly as well on the daily. But what this basically amounts to is, as we've seen on some of the other, especially the SPX, a big trading range, just straight sideways. Just a lot of chop action. So maybe we trickle around the top up here, maybe a day, maybe 2 days, and then start to fall back down. It's anybody's guess, but that seems to be kind of the MO for the markets right now. But still, a break above this 10,500, still not a bad defensible long if you're intraday trading this. I would still be watching for that. The problem we're having with these big moves is a lot of them come on gaps. I actually had told my subscribers to get long over 1100 and look to take profits about 1110 if it got back up there on the SPX. And I went out this morning. It's my daughter's 10th birthday today. So I want to say a big happy birthday to my little girl, Jessie. And I was out today buying stuff and preparing for the party tonight. I got back, just happened to glance and notice I was in the trade. Did a little bit more preparation for the birthday party, and then sat down, sent out my intraday email, and then later in the day realized, I told him in the newsletter, I hope you got in over 1100. Well, I didn't realize that entry actually happened in the middle of the night. So these gaps are really what's making it extremely difficult to make any kind of moves in the markets. You have to be assuming that the markets are going to move up the next day, but at that point you're really gambling. You're just guessing at what you think will happen the next day. So these gaps are very difficult to play. Big gaps down like this, big gaps up like this. They don't leave you much room for really much of anything. I mean, we're up 126 points today. The open was at 10,343, and the high was 10,501. So it doesn't leave us a whole lot of room to make a big play if you're not really quick at the start of the day. So if we move to a daily, though, you can see here we may, right back up to that 10,500 level. Just above it is that upper trend line, and it has continued to hold this entire time. So I'm just going to tell you again, a very defensible place to get short. It's work back here. I called it here, and we had a little bit of a move down. I called it again back up here. We had a little bit of a move down. If it reaches that line again, why not take another defensible short? And we'll just nickel and dime this market until it gives us the big move everybody's waiting on. Which direction that is, we don't know. But obviously, you got to give you've got to give the benefit of the doubt to the bears when it hits this line based on what we've seen in the past. When it gets down here, I'll give it to the bulls. But right now, I got to give it to the bears. So, we made some money on this move. Up here, made some money on this move. Up here, if it touches this line, maybe we make some more money on the next down move. But we're just looking to hit singles here. I know everybody wants to hit the home run, but you're going to have to wait a little longer. And we'll just keep hitting singles and pulling a little bit of money out of this market slowly but surely until finally we get the big one. NASDAQ on a 60. You can see that while the other indices have been testing their highs back up here, the NASDAQ has not been doing that lately. It did have a very nice move up today, but it's not testing these highs. And I mentioned above 1800 would be a good long. Look how we came right up to 1798.5 4.8 and stopped. So this 1800 is proven to be strong resistance, at least on the first attempt. Now the second attempt, yeah, I would think that maybe we'll break through it. So be watching that maybe tomorrow if the markets continue to move up above 1800 on the Nasdaq. Wouldn't be a bad long play. And you can see it's also fighting at the 1800 area with this lower trend line. This is getting a little bit messy in here for me with all these swings, swing high and swing lows, but I still like this solid blue trend line I have drawn in here. I really like it. I even like it more today after we hit it and retreated. So we're watching this lower trend line here for any sense or any more sense of resistance up in this area. But once again on the 60, it's very clear. Above 1800 takes us to 1815. Above that would be another defensible long play. NASDAQ on a weekly, we just got started, but these 2 days from the last 2 weeks just look like a pullback at this point. Way too early. Still only Tuesday. And we just entered December 1st. SPX on a 60. Here's that big range I've been talking to you about. It's way clearer on this one. And you can see 1085 to about 11. I'm saying 1110, but 1112 is probably a little bit more accurate. Somewhere up in this area. So I'm, as I said, looking to take a long over this 1100 area here and then up. Now I did make mention yesterday that a very logical thing for this to do would be to gap up over these moving averages, and that would be a good place to take this long then. And sure enough, that's exactly what we got. Once again, when the markets can't break a resistance or a support area, what's the easiest way to get through them? A gap. You just gap. Just flat out move above them. And that's what we saw today. A big gap up right above these moving averages. That way you don't have to play with them from underneath. You don't have to come up and hit them and hit them and hit them and try to break through. Just gap above them and be done with it. That's what we saw today. And a quick move right back up here to resistance. So for those of you that were, nimble, you could have easily caught a few points this morning in the trade. The XPX showing me that it opened at 1098 with a high of 1112. I don't think the spiders reflected that though. So anyway, it was still a very good play. If you could catch this up and over this 1100 area, it was still a good play to the long side. But don't get too greedy up in this area. 1112 is going to hold at least for the first attempt at hitting it. Maybe the second attempt finally breaks through. But that's what we're watching for. A break above 1113 and ultimately 1115, I think, is a very defensible place to get long. If you're a little bit more aggressive, above 1112 or 1113 is a little bit more aggressive play to get long. You might be able to squeeze another couple points out of the market if it continues to move up. You also take the chance that it's going to do a head fake and dive quicker too. So completely up to you how you want to play it. Just manage your risk on either play. Here is that chop action from the 1085 to the 1110, 1112 area right in through here, and you can see it's all sideways, but all this means is consolidation. There's a bigger move coming. Been talking about it for a while. When it'll come, who knows? Could take all month. We could do this all month long. I've got a subscriber that's playing it as such, and it's a pretty brave play, but I hope it works out for him. So I think it's actually a pretty smart play at this point, just based on the action that we've seen so far. So be watching this very closely. Watch this this trading range very closely, looking for the breaks as I've stated back on the 60-minute for your entries, long and short. SPX on a weekly, still 2 days into it, but man, if this doesn't look like a pullback these last 2 weeks with another move to the upside coming this week, at this point, that's exactly what it looks like. But that's what these last weeks looked like too, until the very end of the week, and then pow, they dove down. They went straight south. So until the end of the week, we won't know for sure. But on the weekly, sure looks bullish at this point. VIX on a daily, way down, 10.5%. Huge move down in the VIX. This thing continues to just chop sideways as fear comes in and comes out, comes in and comes out. I mentioned yesterday with the Dubai news not being that big of a deal come Monday, people have short memories. Sure enough, that played true today as the VIX lost all of its, well, not all, but a majority of the fear that had come into it from last week on the Dubai debacle. So this is huge for the investors to see this fear come pouring out of here. From a weekly standpoint, chopping sideways, 1, 2, 3, now 4th week in a row. We've just been moving sideways along this bigger green line here and the 200-week moving average. Maybe making its way back down here to this dotted line. As I've said before, a break below this dotted line takes us to the bigger green line. below it. Apple falling apart this afternoon. Did anybody catch this? I didn't catch it till almost